What's going on, guys? Benny Childs, founder of the Teach Me to Fish FX trading community, back with another market outlook video. And we're going to try to make this as quick as possible. All right, I'm going to pop up onto the monthly. All right. And let's see, we see that March of 2024 closed above the high of February 2024. So therefore, for April, all right, I'm assuming, I guess, if you will, based off of the next candle theory, that the target for the month of April is going to be $18,708.50. All right, let's drop down to the weekly. Okay, let's get into the upcoming week. All right, so this week, or the last week, the week of Monday, April 8th, 2024. Um, it neither swept the high or the low of the previous week. So therefore, I need to go back another week and see what this week did in reference to or relative to its prior week. So last week's candle closed below the prior week's low. Okay. So therefore, uh, this week's target is going to be the low of the previous week. All right. So with that being said, the initial target is going to be $18,043.50. Okay. Now, what I'm going to do is I'm going to take a look at the external range liquidity and internal range liquidity. All right. So at one point, this was our buy side, correct? This was the external range liquidity. All right. This week's high was $18,683.75. Okay. Since then, we've taken out that liquidity. All right. So we've taken out external liquidity. So now, typically, the market or the algorithm will go from external liquidity to internal liquidity, basically a fair value gap. So therefore, since we took out external, the next internal, right, fair value gap that has not been completely balanced is going to be this fair value gap here. It's basically the week of Tuesday, January 16th. All right. So with that being said, I am now going to mark out my liquidity points until I get to uh, that fair value gap on a weekly. All right. So again, the initial target for the week of April 14th is $18,043.50. Now let me start looking at the liquidity points between current price and that fair value gap. All right. So the next target, and this may happen in 1 week or it may take a couple of weeks. All right. Uh, so the next target after that is going to be $18,006.25. After that, we have $17,620.50. And then after that, we have $17,469.25. All right. Okay. So now, typically, because we're assuming that price is going to go down, the algorithm is going to need to seek some type of buy side liquidity to gain some fuel to start heading down. So at that point, I'm going to drop down to my daily. Okay. Now I'm going to take a look to see what Friday's candle did relative to Thursday's candle. Okay. So Friday's candle, it neither swept Thursday's high or low. All right. So now I need to go back another candle, right, to see what it did to its day candle. So Thursday's candle, it closed above Wednesday's high. So therefore, I was looking for on Friday, I'm looking for Thursday's high to be hit. It was not hit. So therefore, that is still going to be my target for this upcoming Monday. So Monday, April 15th, 2024, I'm looking for $18,519.25. Now, all these targets are really based on if the algorithm does what we assume it will do. 9 times out of 10, it doesn't. So you just gotta uh, trade what the market gives you. All right. That's always my underlying concept. Yes, I can put these targets out here and they can be hit, but it does not necessarily mean it's going to go in the way that I think that it should go. We're still pretty close to the initial weekly target, so it's very possible that next week could open up and we could, sorry about that, we could sweep these targets, right? And then head up and hit Monday's drawn liquidity or even the target for the month of April. All right. Or it could just play out the way that I'm assuming it's going to play out for this week, and that is sweep the target for Monday, head lower to this internal liquidity, and possibly head back up to take out April's monthly target. Okay. Now, one thing that I forgot to mention that I want to show you guys is what I think the market is going to do overall. Okay. And I do that based off of a weekly standpoint because I come from supply and demand and trading the COT reports and just doing that on a weekly basis. All right, so I'm going to take a look at the dealing range for on the weekly time frame. All right. So my dealer range is going to be from liquidity sweep to liquidity sweep. Okay. So I'll redo it just so you guys can see me do it. So this is before this push up. This was the very first liquidity sweep for this price leg. So I'm going to start there. And now where was the last liquidity sweep for the current price leg? It was here. All right. So therefore, my dealing range, sorry again about that, getting all these notifications. My dealing range is from $14,594.50 up to $18,708.50. All right. So since that is my bullish dealing range, I am looking for price to ultimately come down into discount, all right, whether that is at the 50% or maybe down lower. I'm looking for a price to overall come down into discount before heading back up. All right. And that, of course, again, is if the market wants to play correctly. So I'm looking for uh, the market to trade at least down to $16,651.50. All right. And finding some type of discounted area of interest to push up from. So, I mean, we could see the market tap into that liquidity, tap that liquidity, or hit any of these fair value gaps and head higher. Okay. Um, Eventually I'll get into maybe showing you guys how um, I average into my long-term portfolio. I do have a long-term portfolio, a Roth IRA that I use for my long-term holdings. All right, and I'll kind of go over that. But again, eventually, I'm looking for the market to come down into any of these discounted areas of interest before heading back up. And again, that's only if the market plays correctly. Um, If we come into a daily, all right, and look for our, see if we can look for a daily, um, this would just really be a daily price range, right? For me, there's a difference between a dealing range and a price range. For me, the dealing range goes from liquidity sweep to liquidity sweep, right? However, a price range pretty much goes from the most recent high to the most recent low. Okay. So let's see. If we come in here and we draw out the most recent high, all right, to the most recent low, and I'm gonna change this to the OTE settings, and I need to reverse that. I think I already have it reversed. I'm sorry, I don't need to reverse that. All right, let's see. So we have already come up into premium based off of the most current price leg. Okay. If we had this high, we had a break of structure, it created a low. So it is a bearish price leg. A bullish price leg would basically be a break of structure to the bullish side. So um, again, we are as far as the daily price range, we are we've actually already completed it. So I'm not sure how likely this target I have for Monday will get hit. However, we'll keep it there and we'll be on the watch. And at least we know that this is a possible target that the market could come up to. Um, Not forgetting these other um, buy side draws on liquidity that the market could go for. All right. So these are technically, let me see, what can I use to show you guys? All right. Come on. Let me just do this. Thank you guys for bearing with me, you folks. All right. So this would technically be low resistant, low resistance liquidity or low resistance liquidity run. Okay. And I am going to not extend the line. Okay. I'm gonna do that here. So this is all liquidity or trend line liquidity or low resistance liquidity run that is building up that we could see the market come take all these out and go ahead and hit this monthly target for April at any time. So it just depends on when the algorithm wants to seek this liquidity. So all this is a liquidity buildup that eventually the market is going to take out. So the next thing I'm going to do and go ahead and end the video is take a look at our high impact news. All right, so we have high impact news coming out on the 15th, 16th, and 18th of next week. So definitely expect volume to be injected into the market on these days. And the other days, it's very possible that we may not see much volume injected into the market, but that's not necessarily the case. So I want you guys just to be on the lookout on these days at these times to make sure that you are not in a trade, right? If you're in a trade before these times, go ahead and take your profit, let the news play out, and then maybe jump back in anywhere between 30 minutes to an hour after the news has released. Okay. All right, guys. That is going to be it. Is there anything else I want to say? I mean, there are some other things. I mean, you can look at the weekly profile, take a guess at the weekly profile for or looking at the high impact news, but we're not gonna I'm not going to get into that right now. But other than that, guys, that is going to be it for me for this market outlook for the micro NASDAQ 100 index, futures index. All right, I hope this video has been insightful and helpful. And until next time, I hope you all stay well and safe trading to you. Bye.